Hello and welcome to the Cameo Show. I'm your host, Cameo, and today we are joined by my husband and co-host, Mr. Greg Braun.
How's everybody doing?
Mr. Greg Braun starts us with a dad joke. So, Greg,
So I get a great dad joke today, and it fits what we're going to talk about. Why is money called dough?
I don't know.
Because we all need it.
Need it. Knead. Need. Good job. Like the cats when they make biscuits, right?
Mm-hmm.
Yeah. He's right. That is a great dad joke for our show today. Often we talk about physical, athletic, mental wellness on this show because it's a lot of what we do on a regular basis. It's important to us. But today we're going to switch and we're going to talk about financial wellness. For those of you who don't know, Greg and I own Braun Mortgage Group. We originate loans. We help people buy houses and obtain the loan that they need in order to do so. I personally have a background in finance. I, since the age of 20, have been a financial advisor, and for the last 10 years, joined Greg in the mortgage world. And Greg has been in the mortgage world for the last 20 years, ever since we started dating 20 years ago. And so over the years, we've acquired a lot of knowledge, more knowledge about the mortgage industry than we probably would ever like to know, but we have been through the ups and downs of the stock market and the mortgage industry. And so we have picked up some tools and tips that feel like normal information to us, but not a lot of people know. And we're really recognizing that not just through our customers, but now that our daughter's 18 and she has questions about credit and savings accounts and automated savings. And so we're going to cover some of those things in this episode for you to get some baseline knowledge about not just the mortgage process, but credit and finances, and also to share with your children who are coming of adult age or anyone in your family or friends who might be approaching buying a home or
Yeah,
trying to save for
that's right.
whatever, like this is something that we all need to know that they don't teach us in high school and that we take for granted because it's what we do for a living,
Yeah.
but is such valuable information. So
So if you like this episode and you know of anybody that's buying a home in Florida,
in Florida,
forward this to them because this should be helpful.
yeah,
For us, we're set up at Braun Mortgage Group where I kind of talk to the clients initially. So I'm having a lot of conversation around credit and income and how much house they qualify for and things like that. And one of the first things that we go over is credit. Credit score is super, super important. And a lot of times people think, well, I pay cash for everything. I should have good credit. And that's kind of the first myth buster that we want to kind of debunk here is that, you do have to establish some sort of historic record with the credit bureaus, which are TransUnion, Equifax, and Experian, to show them that, hey, this person can manage credit. So they have, for example, a $10,000 credit card limit, but they use a small portion of it and then pay it off every month. That's going to help stimulate a great credit score for somebody.
yes. And while there is a misperception that you have to have an 800 credit score to obtain a mortgage, the higher the credit score, the better in most cases, although you can have a lower credit score to qualify. But just establishing some sort of credit is essential to obtaining a mortgage. If you don't have a credit score, you don't have a mortgage or a car loan or much access to money from institutions. They're
Yeah.
not going to lend you money, especially in large quantities for a vehicle or for a home loan, if you don't have a history of paying your bills on time. And you're right, people have lots of assets. They pay cash for everything. They don't use credit cards. They bought their car with cash and they want to obtain a mortgage. And sometimes they are floored by the fact that they can't because they don't have established credit. And it's like, you got to go get one of those store credit cards. You don't have to run it up, but you've got to use it and pay it off and establish that you can do so, because paying things like utilities or your cell phone bill, those don't establish credit. Those are just bills that you pay, and you may pay them on time, and I hope you do, but they
Yeah.
don't get reported to the credit bureau. So things like loans and credit cards are essential to establishing a credit score for life in general.
So let's say you're just starting out and you don't have credit and you're trying to establish it, one of the cool things that we've discovered that works really fast is getting added to someone else's credit card as an authorized user. And all of that historic record of their credit history with that account will show up on your credit report.
As
So,
if you've had the card yourself or the account yourself all of those years. So you want to make sure it's someone who has been paying their credit card bill or whatever bill on time, or you will also inherit bad credit if you pick
yeah.
someone who didn't. But we did that for our daughter. And so at 18, she already has well established credit because she was an authorized user on our credit card that was in good standing that she doesn't have access to use necessarily, but that we use and pay on time. And so all of that history shows up for her. It populates in.
Yep.
And that has been a game changer for some people who have not had established credit
Yep.
to be able to be added to a spouse's or a parent, someone in good standing, and populate in a credit score for them.
And something else that I've discovered on the journey of talking to people about credit and helping them get as high as possible, those credit scores as high as possible, is not you don't necessarily want to pay off your credit card account every month. Sometimes you want to leave a little balance on there, and that will show like that there is a balance that's being managed. If you pay it off every month, sometimes that shows to the bureaus that it's inactive.
Oh, wow. Yeah.
So
I think credit and credit scores, they always pop up for people like, what affected my credit score? Too many inquiries and
yeah,
too short of account history. And like, I think credit feels like this mythical unicorn creature to understand. And honestly, it kind of is. But these little tips have proven to be helpful to people in establishing a higher score. And you're right, we've seen people who have paid off something thinking like this is a good thing, I'm going to pay off my car or my credit card all at once and it'll increase my score, and in fact it had the opposite effect for whatever reason.
yeah.
Back to that unicorn. So always good to ask those questions too if you're looking to obtain a mortgage loan with us or anyone else for that matter, to make sure that whatever you're doing with regard to your credit isn't detrimental even when you think it might be beneficial.
And I've got a couple other things on credit. And this is something we just did ourselves too, is you can freeze your credit.
Yeah.
And you had some fraudulent activity.
I had an email bomb go off where I had like 1,000 emails come in every minute. It felt like that might be a slight exaggeration, but not a lot of hyperbole. Like literally thousands of emails so that it would flood me and I wouldn't see emails coming in that I got from where we bank saying, hey, you might have fraudulent activity, or where the order was placed. So all of a sudden, I'm like, this is wrong. I checked our credit card and I had $13,000 worth of Prada purchases. And I'm like, oh boy, okay, something is really wrong. This isn't what this episode is about, but I'm just sharing with you that that happened. So
It's
if you
story
see
time.
it, you have to be aware of it. Always check your credit cards if something like that happens because something is major wrong. But long story short, it was like a major thing. And so I had to freeze my credit because somehow, somewhere, someone was able to access my credit card account information and make major purchases. And you hear like, so and so gas station had skimmers on it or whatever. Like it's just something that we deal with, and it can impact or affect anyone and everyone, no matter how closely you monitor it, no matter how safe you are, it happens.
Yep.
That's the
And
end of my story.
but that situation made me feel vulnerable and
Yeah.
like, oh my gosh. And so it was in that moment that was like, all right, well, let's look into freezing all three bureaus. So you can go to each bureau, Equifax, TransUnion, and Experian, and freeze them at the bureau level. Now, anytime you go to have your credit checked, you're going to have to unfreeze them, which should only take 5 minutes. You can do it
That's
all
still
online.
really easy. Like I thought that,
Yeah,
like I had this misconception that it was just so difficult and you had to call and wait online forever on the phone.
yeah.
You don't. You just jump online. It takes 2 seconds. So definitely protect yourself.
Yeah.
It's
So
easy.
so that's good. And then you can also do a free review of your report. You can go to annualcreditreport.com, or there's other services out there that offer consumer facing credit reports. We tend to find those are about 20 points higher than what we pull as a professional tri-merge credit report, just across the board blanket statement. So you might get a number that's a little bit higher just because it doesn't reflect everything that's being reported.
But it's a good
But it's a
baseline.
great baseline, yeah, to see kind of where you're at and know if there's something that's not right on there. The whole idea here is to be prepared and ready. So if you do want to make that major purchase, you weren't planning on buying a new car or a used car, but your other car breaks down and you have to, you want to make sure that you're ready for that moment. And
Yeah,
and credit is so important
that's right.
because it means you're getting the best rate possible versus a much higher rate because the loan's riskier to the lending institution. So
That's right. So, all great information about credit. That is a huge part of financial wellness. We talked about a DEXA scan on a previous episode. We've mentioned that we've gotten our comprehensive blood panels done. You pay attention to your nutrition, like you go work out, you measure your body fat, you measure your muscles, you pay attention to those things. Financially, you have to do the same with things like your credit. Because if something comes up, you want to know where you stand. You don't want to be surprised if and when you need to access credit by things that you thought you were doing right or things you didn't know were happening. So,
yeah,
credit, number one.
that's good. And then the next thing we look at when we pre-approve somebody to buy a home or any major purchase is income. We have to document and show the income that someone makes and the ability really to repay the loan that they're borrowing.
Mm-hmm.
And back in the day, they would just assume based on credit score, but you can see that that really got the housing market in a lot of trouble. So
Yeah, 2008, when you could just say,
yeah,
well, I make $10,000 a
yeah,
month because I say so, and no one's going to ask for any documentation on that. That caused some trouble.
yeah,
So now documentation is thick and it's sometimes annoying, but it is necessary and you will definitely not get around it no matter how how many times you ask or what you try to sneak by. So it is really important, I guess is the point. And we bring that up not just as it pertains to a mortgage loan, but financial wellness overall, like really having an understanding of what you're making, whether that's hourly, whether that's a salary, whether you're a salesperson and your commission. Knowing what you make on a consistent basis is essential to knowing how much you can spend, knowing how much you can qualify for, knowing how much you can afford, knowing how much discretionary spending you can do. It again goes back to like knowing your numbers. If you don't know how much money is coming in every month, how can you know how much you can send out? And like I mentioned about our 18-year-old daughter, she's just now entering the workforce. She hasn't necessarily had to worry about that so much up to this point. And many of us didn't until we were like out on our own. And it's like, okay, how do I budget? Well, the first step in budgeting, the first step in applying for a mortgage, one of the steps is knowing how much money you're making and having a really, really good understanding of that. And then also for loans, being able to document it
yeah,
through pay stubs and tax returns. And, again, we run into customers who maybe are self employed and they make plenty of money for their lifestyle. They understand how much money they make, but they show the IRS that they don't make much or as much. And that can really impact someone looking to buy a home or anything else for that matter. So, having an understanding of how that will impact you and what you make, what you claim, how much you can budget, how much you can spend on like essentials and then also discretionary things is, I mean, you literally cannot survive financially without knowing that stuff. So,
yeah. And what's interesting is when you do apply for a loan, I know specifically for mortgages, they use the gross income.
mm,
So they're using before the taxes are taken out or any of that stuff. So it's kind of weird that is what is used. But for someone that has a W-2 full-time job, they're going to use whatever the gross annual income is. And then it's typically about 45% of the expenses, the new housing expense, and their current debts included in that on a monthly basis, and it's about 45% is kind of the rule of thumb. There's
so we'll
variance there, but
round because I like to round things to make it easy. We'll call it 50 just for easy numbers. So if I make $60,000 a year, I need my expenses to be under $30,000 a year. $60,000 a year is $5,000 a month. So my mortgage payment, any car loans that I have, any credit card bills, student loans, anything that shows up on my credit report needs to be under $2,500 a month. All of that included. And that throws people for a loop sometimes too, because it's like, gosh, I make plenty of money to afford this home or to afford this car or to afford this lifestyle. But when it comes to qualifying, they aren't allowing you to use 100% of what you make. It has to fall under 45, but 50 for rounding easy numbers percent. And so that's something to be cognizant of as you're understanding your own finances and what that means for you down the road now, whenever a big purchase might come into play.
Yeah.
And that also, I'm not 100% sure on that, but I do believe that like when you apply for an auto loan or a student loan, they look at your income. They look at, you know, what you're making, how much you can afford to pay back. This is not just mortgage specific. This is,
I know, but I think it's specific about the gross income. I don't know how they, if they look at net,
yeah,
I don't
we
know.
don't know the
I don't want to
details
speak
on
for
that.
them,
Yeah.
but just in mortgage world, we look at the gross
And
but
overall, it's important.
yeah,
Is I guess the what I'm trying to say is
yeah,
that it's probably not just important for buying a home.
no,
It's important to know, period, if you want to access any type of loan,
yeah,
and also, again, survive financially.
yeah.
If you're spending more than you're making, that's a recipe for disaster. And like
Yeah,
that's like baseline. Imagine being 18 and not really fully comprehending that. Like, I don't want to like embarrass Faith, but she asked the question of like, when you use money on a credit card, you have to pay that back. Like, she was kind of like mind blown. She didn't realize like, oh, I have to literally pay all of that money back, not just the minimum payments,
yeah,
not just, they give me a certain amount that I'm allowed to use. And then once I've used it all, it's over. Like, you know, these, again, we've been doing this forever. We're now in our 40s. Like, we've acquired some knowledge that maybe an 18-year-old doesn't know, or maybe someone who has been dependent on someone else financially, a spouse or whatever, like comes into a new situation, they don't fully understand that. So even at a very basic level, some of these things,
yeah,
are that's why we're talking about them.
yeah. So your credit's important, your income's important, and also assets. So we need to see, if you're buying a home, we need to see where the down payment's coming from,
Mm-hmm.
assuming there is a down payment involved, and how are you going to pay for closing costs, that sort of thing. So you can use 401k, you can use IRA, you can use obviously checking account, savings account. A lot of people don't really realize this, but you can also get a gift. So, a lot of young people starting out, they might not have enough saved up for their down payment, which by the way, you don't need 20%.
Yeah, another misconception.
You can do 3% with conventional and 3.5% with FHA, and VA is no money down.
Yeah.
So there's different options out there, but even saving that 3% plus closing costs might end up being $30,000. You just don't know. It depends on the price of the home that they're buying. But gift funds, we see that quite a bit too, where there's a relative that's wanting to help out,
Mm-hmm.
someone that's buying a home, and there's just one form that they've signed that says, hey, this is a gift, we don't intend to be repaid for it, and we can use that for down payment. So there's a lot of different options there, but understanding your big picture of your financial situation, your credit, your income, and your assets, those are the big things that I look at when I'm pre-approving somebody.
Yeah. And things that we've seen that have been successful for people over the years with regard to savings, I would say like the number one thing that I see people do is just do something systematic. So we started that again, kind of back to our daughter. She's 18. She's just entering the workforce. She's just entering this kind of financial independence part of life, right? That we all experience and stumble a lot right out of the gate sometimes. So she started working. She's got her direct deposit coming in, right? What's the easiest way to accumulate money? Have it taken out like it's a bill. Even if it's just $25 a paycheck, even if it's $25 a month, when it's taken out because it's money that you treat as if it's a bill, months go by, you don't think about it. And then you finally look at it when you need it and you've had the ability to have some savings. Hundreds of dollars accumulate over months at a time because you're not really paying attention to it. You've set it, forget it, and let it build. I think people think like, oh, I got to save big chunks of money all at the same time. That's just not the case. Other people, it's the same theory as like a 401k where you take out 3% of your pay. If you're not doing that, do that, especially if your employer will match 100% up to whatever you contribute at a certain level. Like, that's free money that they're giving you for long term. You won't miss it. I shouldn't say that. In some cases, you will miss it. You will miss that 3%. You will miss the $25 if you are paycheck to paycheck and you are barely able to scrape by. Maybe this isn't where you are financially yet, but it is a great option to try when you are financially stable enough to do so.
Yeah.
It just takes all the pressure off of like, oh, I've got to move that money or I need to save that money. It just happens for you. And you don't even realize it until you go to look at what the balance has grown to.
Also, kind of jumping back to credit, but it kind of goes in line with the budget and everything. So there was a time in our life early on when we had a large amount of credit card debt from another failed
Endeavor.
and we were just too stubborn to file bankruptcy. But looking back, it's like, well, that's what everyone would have done. So basically, we were just living for a long time, paycheck to paycheck, even though some of that time we were making a lot of money. By anyone's standards, it was a lot of money, but it was always very frustrating for me as the, primary breadwinner. And it was like, this is unbelievable. Like, I just, it's disgusting that I feel like I'm not getting anywhere.
Yeah.
For years, and it just wears you down because you're making this money, the taxes come out, and then you have to pay these minimum payments on credit cards that you're not seeing them go down in balance. There's nothing more deflating. I mean, it was just like, and I'm like Mr. Optimism guy, and I would always be like, oh my God, this sucks,
Yeah.
Just to share kind of how we over time ended up paying all of that off, and it was a lot. Was we made a batting order, and this is a Dave Ramsey method,
I know we're not like big, huge Dave Ramsey fans. We're not like anti Dave Ramsey, but we don't like pay attention to much.
Yeah.
But we picked this up somewhere. You picked this up somewhere, maybe a book or like
just
from him.
Honestly, this is one of the things I love about being in sales is you talk to people.
Yeah.
And so being in sales, being in the financial world in sales for 20 years, I've had some amazing conversations with some really smart people that are way smarter than me. And you just learn. You just learn a lot. Like, how does this multimillionaire handle their money? I'm listening.
Yeah, right.
I don't act like I know everything. I don't want to come off like I know.
Well, no, I'm just kidding. No,
but you got to be. Someone told me early on, they're like, this is years ago. They're like, you're a young guy. No one's going to listen to you unless you're an expert. So you have to come off as an expert. But there's a way to not be an a-hole,
Yeah.
But so at a very young age, when I knew nothing, I had to act like I did. But I would listen to people, and like one of the things that I gained was how they got out of debt was like you just write it all down and see like where your balances are, what your payments are, and just start knocking the small ones off first. And then once those are gone, you can take what you're saving there every month and just kind of snowball until you're down to just one or two big ones that you can make big chunks. Because what we were doing up to that point before we started doing that was paying an extra $50 to each of them. And nothing's happening. The needle's not moving, and it's frustrating.
Yeah, even if it's just psychological, like to see that be knocked down. We had a spreadsheet for years that listed the cards. And, for any of you who have played the balance transfer game, I mean, geez. We did that for many, many years to 0%, and this one needs to be moved, whatever. But we had this spreadsheet where we put all the balances, and to your point, the Dave Ramsey method, and maybe it's not even, maybe it's our own interpretation of it, but we would start with the one, let's say it had $1,300 balance. We would pay everything extra that we had to that card until that balance was gone. And then that money that we had would then go to the next one. So minimum payments on all the other ones. Maybe we ordered them by interest rate too.
It was balanced.
It was by balance.
We had to ignore the rate.
Yeah.
Because it was like, let's just pay these small ones off.
Which is maybe not awesome advice. Like if you have a high balance at a high interest rate, maybe you should tackle that one first. But we didn't. And it made it feel not made it feel, it made it move the needle, and it psychologically helped us feel like we were actually making a dent in this. So that worked for us. Something to research for sure. And kind of goes against what we were talking about, like paying off your credit cards to get a mortgage. Like, these are kind of separate things with regard to financial wellness, but kind of the same idea with the savings. Like, if you do it automatically or you have a system in place, you feel like you're making progress, even if you're not paying that much attention to it, like with regard to savings. If you're not watching it every time or having to make a conscious effort and it's just happening, that's something that we've seen people do that's successful. The other thing that I would add on the savings piece, and this is from my financial advisor background, is that if you're able to save and you have a comfortable amount of cash savings, and that's different for everyone. At the bank or at a financial advisor, they'll tell you it's a certain percentage of your overall assets. Whatever, it's everyone's personal preference. But once you have what you feel safe with 6 months of expenses in a savings account that's cash and liquid, the rest of that money needs to be invested in something that's going to earn you more than a savings account if you ever want to see compound interest and cumulative growth in your funds. So wherever that safety net is for you from a cash liquid savings standpoint, everything in excess goes into something that will grow, whether that's an index fund, a mutual fund, a freaking bond. It doesn't matter, something that has a higher interest rate. And the best approach is to have a little bit of everything so that you're covering all of your bases. You have long-term growth money, you have short-term cash access money, and everywhere in between. So this is not financial advice.
I was going to say, this is not financial advice. This is
just what we've seen. It's what's worked for us.
Yeah.
And, tips for someone like that's what I would tell our daughter. So that's why I'm saying that now. It's like, I'm not telling you specifically what to buy or what not to buy. I'm just saying that that is a good approach as you start dabbling into that and researching. Keep a high level. It doesn't have to get granular and scary and overwhelming. And if you don't have the ability to reach out to a financial advisor or a mortgage broker, you can find great resources online to start researching some of this stuff for yourself to understand it. That's important. I don't know why it's not a class in high school.
It might be.
Well,
we say that, but it might be.
It might be because I haven't been in high school in a minute. Anyway, the last thing that I will add, and this is just kind of my sass coming in here a little bit.
I don't know. You better run it by me first.
No, I'm just going to go for it.
Oh, jeez.
When it comes to money and when it comes to financial wellness, don't be fooled by appearances. And I say that, again, a little bit of my sass, but with social media and with keeping up with the Joneses, if that's even still a saying, or maybe that makes me old too.
Well, now that's social media because you got to keep up with what you see as status.
Yeah. Please keep in mind that your financial picture, your financial wellness has nothing to do with anybody else's. And you might see your neighbor driving the Lamborghini. You might see your neighbor carrying the Chanel bag. You might see, your neighbor, they appear to not work and they're, you have to not pay attention to that. And you have to really stick to your own ecosystem of your finances. And what works for you may not work for someone else. And what works for someone else may not work for you. And what they're doing may not be real. It may be a falsehood. It may be something that is perceived, like the Lamborghini's on lease, or, they've racked up a bunch of credit card debt to buy that Chanel bag. Like, don't get caught in that comparison game when it comes to finances. Keep your blinders up, pay attention to what you need to know, and make decisions that are best for you from a financial wellness standpoint, just like you would anything else in your life with regard to health, fitness, nutrition, all of that. Like, it's all very specific to you. There's high level information. There's all the other stuff that looks great. Find where you fit in that block and don't veer from it. And definitely don't be lured into it by appearances because they aren't always what they seem. That's my sass, but I think it's good advice. We see a lot of finances. We see a wide range of people who have money, who don't have money, who have, a lot of assets, who don't, who have big cars, who don't, and it's not always what it looks like on the outside. So that was okay, right? I didn't need to run that by you.
And that is true. I didn't come from a lot of money. You didn't either. we both went
We
to college and things like that.
and
But
we started out the first 10 years of our life financially really rough
yeah,
and physically and
yeah, all
nutritionally, all of it.
yeah. So
So
yeah,
we've been in the trenches, I guess is the point.
yeah.
And over the last decade we've really cleaned it up across the board. We'll call it that.
And one of the ways of doing that,
Has been
minding
taking,
our own business.
well, yeah, minding our own business.
Again, for someone that's just starting out on a fitness journey or a nutrition journey, it's just being sick and tired of being sick and tired, and then going, what do I need to do to change it? And that's where I was. I was completely broke
Yeah,
and just done with it. Like, just I've got to do something and then make
yeah,
it happen. So
yeah. So once again, this isn't financial advice, but these are tips and tricks that we have picked up in our years of being in the financial industry, and also in our years of not being great at our own finances and evolving as humans and as adults and making different choices, so that we have a good understanding of our own baseline and the choices that we need to make over the years. We're sharing that with you. If you're just starting out, if you're encountering change in your life, or maybe you just haven't really given this much thought or focus for whatever reason, or keep stumbling and falling and getting tripped up in this area, these are things that we think might help you, that have helped us, that we see our customers experience as well. So a little different episode today. I hope that it hasn't been too detailed when it comes to finances, but I do think that there are some helpful things in there that you might have taken away, or that you could share with someone who does need this help and information. And we hope you enjoyed it.
yeah,
It's our other area of expertise. It's our baby. Braun Mortgage Group is our baby. If you have any other questions about that, you can always reach out to one of us at braunmortgagegroup.com. Shameless plug. And we'll leave you with that. Until next time.